So President Biden making his case once again for raising taxes, not only on the wealthy, but also for corporations. We know Democrats and the GOP are still very far apart on this. Republicans making the case that raising taxes on corporations and the rich are non-starters, that it would make the U.S. dramatically less competitive. I guess give us the base case on why this makes sense and why this is the right thing to do now.
Well, look, as the president said today, first of all, what we've seen over the first few months of his term in office is an incredible economic turnaround. In the 3 months before the president took office, we were averaging about 60,000 new jobs a month. In the 3 months since, we're averaging 500,000 new jobs a month. Economic growth was projected at something like 3 or 4% before his inauguration. Now they're projecting 6 or 7%. In some cases. So what we have seen under the president is a very fast economic turnaround that has allowed us to go from lagging the rest of the world to actually leading the world in the economic recovery. And what the president wanted to make clear today is that that's the first step, and that's an important one, and that was not a given. But the next step is making long-term investments to increase the productivity of our economy, to increase economic growth, and to position the United States to lead the global economy and to take on competitors like China. We were glad to see a counteroffer come in from the Republicans today. It took some important steps towards our proposal in some key areas, including roads and bridges. But I think that there were still many areas in which the Republican counterproposal did not offer investments that we think are very important. And just to give you one example, there are 400,000 schools and childcare centers in the United States that get water through lead pipes to this day. And the president's plan would invest money to replace those lead pipes and make sure our children are protected and safe. The Republican proposal doesn't have anything for that kind of investment. So there are a number of areas like that. We're making progress, but there's still quite a ways to go.
We're getting some very good economic data, as you've pointed out. The economic turnaround is one that millions of Americans are benefiting from. Given that, as we know it, why would, for instance, we're expecting the $6 trillion budget proposal? Why $6 trillion? Why this huge amount of spending? What makes it necessary to go that high?
Well, I think, first of all, it's important to put in context that this is a long-term figure, $6 trillion spread out over a decade. Compared to the size of the U.S. economy, is a relatively small amount of money. Now, I know $1 trillion sounds like a lot, but the U.S. economy is very large, and it's important to keep that in context. What is in that spending at the end of the day is the relief plan that is going out to folks right now in the form of tax cuts for middle-class families, for the stimulus checks, the jobs plan, which is a historic investment in the United States in our infrastructure and our long-term competitiveness. And the Families Plan, which is an investment in childcare, in an additional 4 years of education. In many cases, these are investments that are about bringing the United States up to the standard of the rest of the world. Look, we are 13th in the world in infrastructure. We don't think that that's acceptable, given the fact that we're the world's largest economy. We're one of the few countries in the world where we're not offering paid family leave for families. There are some basic things that we need to invest in. The president has proposed a way of paying for all of that over the long run. And in the long run, it's going to produce a lot of additional economic growth and then more jobs for Americans.
And Bharat, I guess with all this increase in spending here, one of the big concerns on the street is inflation. That has been a top concern for investors now for quite some time. And then there's also the fear from consumers out there that they will be paying more for their goods. And we heard from the Fed that they, of course, believe that this is going to be transitory. But I'm curious how you're looking at this and how the Biden administration is potentially looking at higher inflation.
Look, we tend to agree. Secretary Yellen just today said that as well. We think that there's going to be some short-term price increases in certain areas as essentially the economy turns back on after being shut off in many ways for over a year. In some cases, those price increases are just bringing us back to the levels we were at before. So for one example is airline tickets, where there's been an increase in prices recently, but still we're below the level of pre-pandemic. The faster than expected increase in some of those prices is actually a good sign, in the sense that it's a sign that the economy is recovering faster than a lot of people expected. So look, we have to remain vigilant. We will. It's also important not to overreact to some of these short-term 1 month spikes when we know there's going to be some volatility in the data.
When we talk about these kinds of spending plans to help people get back to work and to rebuild the nation's infrastructure, the attack's going to come on the deficit spending. How do you get not the Republicans to buy into it? Senators who might control the actual voting here, whether there's going to be a filibuster repeal or not, but the senator from Arizona or the senator from West Virginia to buy into this kind of spending.
Well, look, with all of these things, I think the place that we should start is what do the American people think? And if you look at the polling on the jobs plan, 65%, 70% of the public believes that we should be making investments at this level. And similar numbers support increasing taxes on the biggest corporations as one way of offsetting the cost. So, that stretches across Democrats, Republicans, and independents. So I believe the public is with us on this. What we are doing now is trying to translate that public support into additional support on Capitol Hill. That's always going to be a bit of a process, and we're in the middle of it right now. But I think we're making really good progress on it. And as the president laid out today, this is not just about short-term jobs. This is about the long-term future of the United States economy. What kind of economy are we going to have? Are we going to have one where there's sustained, faster, inclusive growth where everybody shares in that prosperity? Or are we going to have an economy that's only going to work for a narrow slice of folks at the top? The president's vision is for an inclusive economy where everyone benefits in that growth. And he thinks that these types of investments are the way we do that.
Speaking of these investments, you mentioned jobs a couple of times. I'm curious just to get your thoughts on the labor market right now, because we have millions of Americans out of work, yet we have a record number of job openings. From your perspective, I guess, what is happening in the jobs market, and what are some of the things that, I guess, how do we go about best addressing this?
Well, look, again, this is somewhat of an unprecedented situation where we've gone from several sectors of the economy essentially shut down and people laid off or furloughed, and now we're trying to gear things back up. There's going to be some bumps in the road. I think we have to be patient and recognize that. I think it's also important to recognize that while things are turning around and parts of the economy are reopening, there's still a significant number of folks, working age folks, who are not vaccinated. Remember that broadly available, the vaccines being available to everybody only started in mid-April, and it can take 4 to 6 weeks for those vaccinations to be fully effective. There are significant problems with access to childcare, and you see that in terms of working parents reentering the workforce. And so, again, as I said before, I think we have to take a longer-term view about this. There's going to be some bumps and some ups and downs. There's going to be some monthly data that looks a little bit weird. And I think we have to keep our eye on the ball long-term, as the president said today. His view, and I think the data bears it out, is that the long-term approach is working here, and that if we continue to put workers first, if we continue to address the issues like childcare and vaccinations that are holding people back from re-entering the workforce, we're going to get there.
Bharat Ramamurti, Deputy Director of the White House's National Economic Council. Thanks so much for taking the time to join us. We hope to have you back on Yahoo Finance soon.